Hello, everyone. Welcome to another episode of our Brothers Creed podcast, where we talk about motivation, experiences, and exploring what the world has to offer. We're the Thomas Brothers, and I'm Ethan.
And I'm Jared, and today we have our first repeat guest on, Matt Oviatt, who owns, he is a real estate professional. He comes and talks to us specifically about real estate investing. He owns a company that does fix and flips, wholesales. Talks about in the episode how his marketing budget alone is like $40,000 a month. So he's serious into real estate investing and finding those leads. And then he talks about how he puts them through a sales funnel and just lots of different great tips and ideas and strategies. And he talks about how he got into it. So this is a great episode for anybody that's even remotely interested in real estate. So stay tuned. It's going to be a great one.
All right, let's do it.
You can't climb the ladder of success with your hands in the pocket.
We will not go quietly into the night.
They tell me you're a man with true grit.
I am the one who knocks.
Don't ever tell me what I can't do, ever!
That's how winning is done.
All right. Today we're here with our first repeat guest here on the podcast, Matt Oviatt. Thank you so much, Matt, for taking a little bit of time out of your day to talk with us again.
Heck yeah, Ethan, Jared, honored to be here. Thanks for having me back.
Yeah, no problem. On our first episode together, we talked about goal setting and improving ourselves in that way. You're a man of many talents, and so we wanted to get you back on and talk a little bit more about the real estate world. I know that's kind of where you're in right now and in your business and your life, really going hard with this real estate and different aspects of that. And Jared and I are always curious about real estate and talking about it and everything. We thought it was a great opportunity to get somebody who knows significantly more than we do about it, and probably most of any listeners out there, and just ask a bunch of questions.
Awesome. It's my favorite topic, so it's going to be fun.
Well, thanks for taking the time again. And, I guess maybe a good place to start off would be, can you tell us about maybe your journey to real estate? How'd you get started? What has your journey been?
Yeah. So I read a book when I was in high school. In fact, I remember I was sitting on the beach at a family vacation, and the book is called Rich Dad, Poor Dad, written by Robert Kiyosaki. Most people that I know have read it, and it introduced new concepts, like new ideas to me that I had never heard of before. And of course, he talks about real estate in there. And I had grandparents that had a rental property right next door to them. And I always mowed their lawn on Saturdays. I'd go and mow their lawn. Me and my brother go down and do their lawn all summer. And I remember thinking back then as a junior high school kid, like, so your neighbors pay you guys every single month to live there. Like, why don't they just own their own house? Like, why would they pay you to live in yours? Like, it was like this kind of weird concept to me, because I didn't know anything, right? It was just like an entirely new thing to me that I was trying to wrap my head around and understand. But I think that was kind of the embryonic phase for me, where I just kind of got started and the wheels started going for me. And then I served a Latter-day Saint mission for 2 years. And when I got back, got married, and then rather than buying a house, my wife and I bought a duplex, which we still own today. And that was kind of driven from, those early thoughts that I had watching my grandparents and then reading that book.
Yeah, that was going to be one of my first questions too, was what was your first investment property? I guess it was that duplex.
That duplex, yep. I bought it for $152,500. We lived in one side. The rent at the time, we were getting $600 a month, $595 for a 2-bed, 1.5 bath with a garage. I still own it today, actually.
Which probably worth significantly more today.
It is. Yeah, now it's worth between $450 and $5.
Wow.
Yeah, and
the rents are the rents have doubled. Sorry, Ethan. Yeah, the rents are.
Yeah, I was gonna say
that
rent to that $595 a month was probably not that far off from what your mortgage payment was.
Actually, my mortgage was right around $1,000 with my taxes and insurance escrowed. So by the time I was paying the utilities and had a vacancy loss and doing some repairs, I was essentially paying more than $600 to live in my own side. But fortunately, I stuck with it.
Yeah. Luckily.
So what was it $600 per side you were paying? Well, I guess your side you were not paying anything.
You were living in one side.
You're living in one side, and the other side you were getting $600 off that one.
Yep, you got it.
Cool.
Yeah.
How long ago? If you don't mind me asking, how long ago was that?
I don't mind at all. That was in 2002, the fall of 2002. And in fact, you guys, this is kind of funny. I was talking to my wife about this the other day. To show how little I knew about it, we came back from our honeymoon, and then we moved into the one unit, and it was in October, so it was starting to get cold at night, and the electricity was off, and there was no hot water. And I remember calling my dad. I was like, Dad, I don't know what to do. We don't have any lights, and the water is freezing cold. Like, what has happened to our unit? Like, what went wrong? And he said, well, did you call and put the utilities in your name? I was like, oh, what are you talking about?
Yeah.
I didn't even know that was a thing. I knew so very little, right? So, but looking back on it now, I think, like rather than figuring out every single thing, it's always best to just get started. Just go. Just don't get stuck in the analysis paralysis and feel like you're an expert before you make the first step. Just do it and you figure it out.
Yeah, totally. So is that when you got out of college, were you, I don't remember I'm trying to remember back of my knowledge of you, but I don't think you were in real estate full-time at that point, but maybe just dabbled, or were you in it full-time at that point to now?
I've pretty much been in it full-time until now. Yeah, so we moved into that duplex. I was going to school at the time, and then I met a buddy, and we decided to buy a property in Ogden. 509 East 3rd Street is the address to that one. We bought this thing, and we screwed everything up, and somehow we made $15,000 on it, which we split.
Yeah.
But at the time, $7,500 was like, wow. Did that really just happen? Like, I got to do more of this. And so that was the beginning.
Was that, what was the strategy with that? I mean, is this, because I know there's different ways of investing into real estate, whether it's wholesaling or flipping or buying long-term rentals, or, there's all different types of stuff. We've had people on that do more short-term rentals, Airbnb types. I know your first one was that duplex. Did you kind of focus in one area as you were growing the business or growing your portfolio, or did you kind of jump all over the board?
Ethan, I just didn't know very much, honestly. For me, it was just I just want to figure it out. If there's a way to make money here, I'm gonna hustle down that road, and if there's another way over here, I'm gonna hustle down that road. So that 509 East 3rd Street with a buddy, that was a flip. But I knew all along that, going back to Rich Dad, Poor Dad, that being able to create cash flow is really what creates lifestyle. So I knew that I wanted to accumulate rental properties, but fixing and flipping was going to be my vehicle to be able to create a rental portfolio, because I could turn that cash and park it into buy and hold properties.
Yeah, that's interesting. I think that one of the interesting pieces nowadays is, and when we spoke about the goal episode, that you said that your current business, you kind of do all of the above. You do wholesaling, you do flipping houses, you do, it sounds like you do both of those things in a way to find really the buy and holds and then invest in those buy and holds so that you can get that portfolio of generating cash for your business. Is that kind of their strategy of your business?
It is. Yeah, that's really my strategy with what I do with the profits that my fix and flip / wholesale company makes. They get parked into buy and hold properties. So over the years, I've just been accumulating properties and creating a portfolio of rentals.
So do you have like, when you're kind of new into real estate, a lot of times they'll say, well, what's your goal? What amount do you want to get to? And when you were early in your career and you're saying like, oh, you realize the power of this monthly cash flow, did you set goals for yourself to say, I would like to have, $4,000 a month, and this is what I need to do? Have you many types of goals like that in the past, or do you, just a question about that?
For sure I did. Yeah. And it's funny looking back on it. I remember back in 2006, I remember thinking, if I could create 10,000 a month in cash flow, like, I'm going to have it made.
Yeah.
Which was a good goal at the time because that made me reach, but then as you achieve goals, then naturally you just create more and more goals and you keep growing.
Yeah. So I guess for that 10,000 level goal, just take that for example. What kind of, how many doors or how much real estate, like asset wise, would you need to really ballpark get to get to that point?
Well, I think that depends on what market you're in and what type of real estate you're investing into. So, for me, I own about 180 doors right now, and those doors include a mobile home park. They include an office building, a 21 unit apartment, and then just a mix of single family and duplex, triplex, fourplex, fiveplex, 6, 7, 8plexes, just kind of spread out all over the Wasatch Front.
Interesting. Yeah.
But it's funny though, because the cash flow kind of changes, right? The whole idea of creating cash flow is to create lifestyle.
Yeah.
But then if you have a really good business that generates income, there's no need to live off cash flow.
Yeah.
So it's not like that was the liberating factor for me, because it's not like I take cash flow from property, then I put it in my personal checking, and then I go live on it.
Yeah.
Because
Yeah.
I don't need the money, which is also an empowering position, because then it can just grow and then can use those funds to buy more buy and hold properties.
Yeah, I was going to say, speaking about that, kind of obviously that first duplex you said you bought, I mean, I'm guessing it was, a personal mortgage that you got on the house, kind of like a standard, whether it's FHA loan or whatever it was. Moving forward, did you, as that evolved, as getting the money to purchase more rental properties evolved, what did that evolution look like for you? I know you said the second property that you bought with your friend, did you go through personal loan that way too, or hard money lenders, or how did that evolve into what it is today?
Good question. So I think I was just kind of scrappy, like kind of go back to the conversation. I would just like go down a road and figure that one out, and then go down another road and try that thing. For the first rental, I just got an FHA loan. I had to put 3% down. And in fact, I put 3% down on that. I bought my wife's wedding ring, and I had like $1,000 left in my bank account. And I remember thinking, man, I hope my tenants pay me rent this month, because if they don't, I don't know what I'm going to do. And I didn't know anything about eviction laws or how to do that. I was just like when you're naive, you're afraid of a lot of things. And man, I was naive. So then for that first deal, my buddy borrowed money from his uncle. He gave us friendly terms. I don't remember what they were, but whatever percent, for the time that we borrowed it. And for the fix and flip business, it has evolved, but that's kind of the model is, I have private money lenders, and borrow money from those lenders. Their loan gets secured by the property with a first position deed of trust. And at any given time, I've got about $10 million borrowed from private money investors right now. But that, I mean, from the beginning to now, it's certainly,
ebbed and flowed. Yeah.
Changed. Yeah, exactly. Yep.
And so does the interest rate that you give to different lenders, is that property specific? So let's say you have a new apartment building going to buy. Do you say, these are the terms for helping to loan on this property? We'll give you, 6 or 7% interest, or is it based off of the amount of money that they're willing to put in, or how do you determine what that interest rate will be for those hard money lenders?
So it's set. So for the hard money lenders, and it's not even hard money, kind of has the connotation of like points and a high interest rate.
Yeah.
These are private money loans from
Yeah.
people that I've developed relationships with over the years. So I pay them a 6% return, and I borrow their money just for the fix and flip short-term properties.
Yeah.
For long-term buy and hold, I don't want to use their funds because I want to keep their funds moving with the fix and flip properties.
So for the longer term buy and holds, do you typically pull out a mortgage on those? Are you like burring these? Do you typically burr these properties, or how do you do that? Or do you put down a meaningful deposit, or I guess it's a question of leverage. So you can
only get 10 loans. No, great question. This is so with the Fannie and Freddie guidelines, you can only get 10 loans in your name personally. I only have 2 loans in my name. So I've done a lot of seller finance notes. I've done a lot of mortgage takeovers, like a sub 2 is kind of how they're referred to, where for any of your listeners that may not know, if a seller wants to sell a property and they have an underlying mortgage with a good interest rate and a good payment, I would much rather service their debt than go out and get a new loan in my name. And so that's referred to as sub 2. And then I've also partnered with, probably got, 20 or maybe 40 properties that I've got partners on where they put loans in their names as well.
Now, is all this through the business, or like you own, like your business owns all of your rental properties, and right? Or is it just, and you own your business obviously, but do you put this all in the business name, and then the business is its own entity and has its own cash reserves?
Separate.
Yeah,
they're separate entities. Yeah, so the fix and flip company, that's its own LLC. I've got my S corp, of course, that I run my LLCs through, but then for my buy and hold company, that's its own LLC for different properties. They may have different LLCs, and then of course, with any partnerships that I have, they're separate LLCs.
So you must have a good lawyer friend or tax accountant.
I've got all 3. No, it's true though. I mean, you've got to get the right people on your side to do it all correctly. But there again, though, it's one of those things that you just do it and you figure it out, and you don't get too hung up on, protecting your liability or entity structure or any of these things that people sometimes get hung up on. Just do it and buy it and put it in your own personal name and make it work, and then quit claim it over into an LLC and figure out how to file your return with your CPA, and you're running.
Yeah.
So, we talked about a lot of different potential strategies and ways of going about doing it and lending and stuff like that. But if we take it back to the basics, how are you going about getting these specific leads? Is there through MLS or through
direct mail
or different ways? I mean, maybe with different investing strategies with rentals or flips or whatever else, maybe it's different, but how do you get your leads?
So we have several different lead sources. So our my marketing spend per month is in the $40,000 to $50,000 range. So we have several different marketing channels that we use to generate those leads. So we do direct mail. We do some online campaigns. We have runners that we call them runners that they deliver Post-it notes door to door that say, "We'll buy your house." We've done TV commercials before. We're not currently doing those. We've done, Facebook ads, PPC, any way that we can generate a lead. We are constantly experimenting and holding each campaign accountable to measure ROI, to figure out if we should fuel that fire or if we should pull back or end a campaign and put our funds somewhere else, so that it's continually evolving.
I know a lot of real estate investors, they buy lists and then they use that to either cold call them. Cold calling could be a huge strategy, or direct mailing them. Do you buy lists and do that?
We do buy lists. Yep. We also cold call. We also send text messages. And we also create some of our own lists too. These list providers that sell lists, by the time the list gets to you, it's pretty watered down and it's old data.
Yeah.
But it's better than nothing. I mean, if you're going to market in mass, then you've got to have the data to be able to market. If you're going to send out thousands of mailers each week, then you've got to have people to mail to. So it works.
So obviously, to do a lot of that stuff, it seems like you kind of have to have a team behind you, right? It sounds like it takes a village to get a lot of this stuff done. What would you suggest a strategy of a entry-level person would be? I guess follow your initial strategy of just get a personal loan on something and go down that road, or in today's day and age, in today's market in 2021, how would you suggest somebody goes about getting started?
So it depends on what that person is trying to do. Is this someone that is looking to do real estate full time, or is it someone that has another career path, but they want to add real estate, as kind of a part-time or more of a passive thing? Because for a lot of professionals, it doesn't make sense to try and learn and figure out a whole new career. I mean, there's a learning curve with this, just like there is if you want to get into any other profession. But you can easily invest passively. So it kind of depends on what path they're trying to take. If it's someone that is, I think we're going with this, Ethan, if it's someone that is trying to break in and they want to do this full time, then I would suggest that person get all the education that they can get, because there's so much good education right now that's free through podcasts and online resources. But then figure out a niche that you're going to do it yourself, and then strategically hire people as needed. I don't know if I'm answering the question right here.
That's a great question. I mean, it's kind of like what we're doing with our podcast right now. We're doing basically everything by ourselves right now. But as we begin to kind of ramp things up, we might, have people start editing our YouTube videos, and that way we don't have to do that. But doing it ourselves gives us that experience up front, so we know how it's done, we know how it should be done, and then eventually when we get to the point where our time is more valuable in other things, we can hire that out and have someone else do that.
Once you understand something really well, it becomes a lot easier to delegate that thing, because then you can hold that person accountable and coach and train and make sure it's being done right. If it's something that you don't know about, it's tough to hire and expect that you're going to get the results that you're after.
Yeah. Or even interviewing that person, it's if you don't know what you're talking about, then you won't know if they know what they're talking about. So that makes complete sense.
100%. And that's, we keep throwing money at online, SEO, Facebook, PPC, and every time it's just like beating my head against the wall, because I don't understand that world. It always feels like I'm going down this rabbit hole.
Yeah.
But that's it. I mean, there are things that are just difficult to figure out. And
of all those strategies, which one do you think works the best for you? I mean, where are your marketing dollars getting the best bang for their buck as of right now?
SMS is probably our best bang for the buck.
That's text messages.
I think it's got text messages. Yep. We send out mass text messages. I think it's only got a life of about 3 or 4 more months. They're putting some regulations in that they're gonna put a stop to that. That would be our number one right now as far as return.
Well, what's number, since that one's going to be out in a month or two, what's the second one? What's the second best return?
Our second best return, let's see, what would it be? So we don't have campaigns that just consistently perform, like on a week-to-week basis. Like when we have our weekly team meetings, we get a report of where all the leads are coming from, in our marketing meeting, and we're looking at those. And so we can see by campaign how many leads each campaign produce. In 1 week, we might get high leads from one campaign, but the next it might be low. So because we have 6 or 7 different channels, we get a consistent output of leads, but it's not very predictable. So 1 month we might say, oh, well, our ROI on that campaign is through the roof. But then for the next 2 months, it doesn't perform. It's kind of one of those things that it's just, in some ways, Ethan and Jared, I feel like I'm as much of a marketing company as I am a real estate company.
Yeah,
because
totally.
It's all about the leads. I mean, once you get the leads, you have to know what to do with them, of course. You have to have your people and processes there. But if you can't generate leads, you don't have a business.
Totally.
So it's a constant experiment. So to answer your question, Jared, I'd say number 2, we still get a good return from direct mail. That's list dependent, of course. Mm-hmm. We get a good return we do recorded voice messages too. Yeah. We get a good return from that. We have some niche lists that we market to, like probate, notice of default, some of those specific lists. They're not very big lists, so it's not like you could scale them, but some of those have a good return. But it's
cool. That's great answer.
I wish I had like
no, that's a great answer.
An easy button answer here, but there really isn't. So.
No, and like you said, month to month, it probably differs as well. I got a letter in the mail probably 2 days ago, and it was like, Ethan Thomas, yada, 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 said a bunch of stuff. It was like, we'd be willing to buy your house for X amount cash right now. And it was just like, if I was, and it was a decent amount. And I was like, well, if I was looking to sell my house and I wanted to get out, get something moving quick or kind of make it an easier process, then I was like, oh, maybe I'd consider something like that. But I mean, I'm not looking to move, but.
Or send something that looks like a fake check, and it's like, here's a fake check for $365,000. You want to buy? You're like, oh my gosh, I could just take this right to the bank. Some of them do that,
and people know too. I mean, direct mail, it's difficult, and there's a lot of nuance just on that campaign alone. I mean, you can split test different copy to different lists with different color mailers, from a postcard to an envelope to it's just that by itself there's a whole science to it, and most of it just doesn't produce ROI, by the way. So I've never, I shouldn't say I've never heard, I have seen before where someone just makes like blanket offers, pulled from tax data or however they figure it out, where they auto input your name and property address and whatever valuation formula that they throw at you. I'd be surprised if that campaign gave them a good return, but who knows?
Yeah, because you don't know if the inside of that house is absolutely trashed or what, or if the people have smoked and the house just needs a total overhaul. So
it's probably subject to appraisal or subject to inspection or all kinds of different stuff they do.
Yeah.
And they're just totally taking a stab. I mean, they have no idea what the value even is. They have no idea if you have an addition or a finished basement or a view or, any type of thing that seriously impacts value.
Hey guys, I just wanted to take a quick break and say thank you for listening to this episode and invite you to support us on Patreon. As a loyal supporter, you will get exclusive access to 2 additional episodes per month, which are not released to the public. You can find the link to our Patreon page in the episode description. Let's get back to the show.
So I was going to ask, Matt, so you have these 3 different businesses: wholesaling, flipping, rentals. And we just talked a little bit about your funnel, which is all the marketing that you do, which is really, you said, like half the business. You know, it's kind of reminds me of like McDonald's, where Ray Kroc says, we're not in the burger business, we're in the real estate business. And it's kind of like with you, you're like, well, you do real estate, but really you're in the marketing business, because getting that sales funnel is so important. So when you get, maybe they'll walk us through from the start of the sales funnel, a property, what that might look like, and then how that might trickle down to, well, should we wholesale this? And like what the attributes might look like for a wholesale, and then should we flip this, and then should we keep this, and what the decisions you make there.
Great question. Yeah. So almost all of the deals that we do, we call them off-market deals, meaning they're not on the MLS. We're not buying from the courthouse steps. They're people that are generated from our marketing, and they call in to we call them an ILM, our intake lead manager, and he answers the phone, and his responsibility is to build rapport with that caller, to find out the property details, and to set an appointment for one of my sales guys to meet with them. So he inputs all of their information into our CRM. It gets pushed over to whatever sales guy he assigns it to. He assigns leads on a round robin basis. I've got 3 different sales guys. So he pushes it over to our sales guys are called acquisition managers. He pushes it over to them through the CRM. They call and do follow-up. They might have an appointment set, and their job is to get that contract. They do their own evaluation of the property based on the conversations and the information that they gather. They can pull up tax data. They can look at Google Street View. They might go walk the property with a seller, but they determine what the fixed up value of that property is within 10 or 20 grand, depending on purchase price.
Yeah.
And then once they know what the fixed up value is, then they can back into that number and figure out what we need to pay in order to make money on it. So if the fixed up value is $500,000 and his estimate for repairs is $20,000, based on what the seller is saying, it needs carpet and paint and a few this and that, then he can back out real estate costs or real estate commission costs and title fees and our holding costs when we borrow money from our private lenders. He can back out the profit margin that we need to make, and then he can come up with, hey, we got to be at 380 or less on this property, whatever the numbers are.
Yeah,
and then he gets that contract. So once he gets the contract, then it gets pushed over to our construction manager. She sets an appointment with that seller and she does a walkthrough. And when she walks through that property, she measures the square footage to make sure that it's the same square footage as what's on tax data and aligns with the same that the seller is telling us. She puts together a scope of work to figure out what the cost is going to be to take it to rehab so that we can sell it for that full after repaired value price, $500 in this case. She again builds rapport with the seller. She does a methamphetamine test at the property, because that's important information for us to know.
Oh, yeah.
And she takes a walkthrough video of the property as well. Once she goes through her process, then she pushes all that over to my dispositions manager. And he now has all of the information to evaluate that property, to figure out what our actual costs are going to be and what his ARV actually is. So the sales guy, the acquisitions manager, he might say it's worth 500. When he gets to my disposition guy, he might say, well, it's worth 480. He might say it's worth 520. But he can determine that based on the walkthrough video and other research that he's doing. And then he can back out the cost because he has all of the information from the construction manager. So once that happens, then he determines, do we wholesale this or do we buy this and list this as is on the MLS without fixing it? Or do we fix this up and sell it to a retail buyer? And we have a formula that we use. We send out everything to our wholesale list first. If we can't reach our margin, then it moves to option B or option C.
So you send it to your wholesaler, and you say, hey, if it doesn't meet your margins, you say, okay, we just need to dump this and maybe have someone else get it. You make a smaller or a different margin on your wholesale. Otherwise, you fix it up, sell it. What's the decision and where you want to keep it and say, oh, we want to keep this because and rent it? Like, where does that? Would it just the rents in that area are really high, or it's a good rental area? I guess it depends on the property as well.
Purchase price, are there terms? Is it a seller finance deal? I kind of look at that independently because it's a separate company, right, from the fix and flip company. So I kind of look at those independently, and I determine, hey, is that one that I want to grab to buy and hold long term? That's just kind of a separate decision that I make on those. So as far as if we wholesale or if we take them retail, right now the market is so hot and our wholesale buyers list is so good that we make 70 to 80% of the margin on a wholesale deal, meaning that we're going to make 70 to 80% of the money if we wholesale it versus taking it to retail on our own.
And that's, when you're doing it, when you're 70, 80%, and that's happening quickly. You're just like, hey, we're done. You come in with cash, you buy this. That's a quick transaction with people who are also professionals, as opposed to selling it retail. You're making the extra 20%, but it's a longer process. You have people that are pulling out mortgages. So it's almost like more cumbersome to sell retail if your wholesale market is so hot and giving you that much of a margin, right?
Definitely. Yeah, definitely. And for those listeners that don't know what wholesaling is basically it's a simple transaction. Let's say you, Ethan, you are going to buy a property from Jared and your contract price is $100,000. You have that contract. Now you can wholesale that contract. So you say, hey, Matt, I've got this property. How much are you going to pay me for it? I say, well, Ethan, I'll pay $120 for it. Then as the buyer, I go into the title company with my cash and I perform. So you don't have to do any type of, borrowing or bringing in your own funds to close this deal. The title company simply just takes the 120 from me as the buyer, kicks you your 20, kicks the seller their 100, and you're done.
Sounds like a super simple process.
It is actually. Yeah, it's very simple. So you guys know the market's red hot right now. So the real advantage to being in, where you can control leads and you can generate leads on your own is that you control inventory. And when you have inventory in a market like this, then you have wholesale buyers that will pay you a premium for that property because they can't find property on their own. They want to be a real estate professional. They want to do it on the side and do their thing, but they don't have any inventory. So as an inventory supplier, they're going to pay you a premium because there's 10 rehabbers to every one wholesaler, or whatever the numbers are. There's a lot more rehabbers to wholesalers, right?
Do you ever buy properties from someone who's wholesaling?
Not very often, but on occasion. I actually just bought a rental in February from another wholesaler. Yeah, on occasion. For me, I don't care where the deal comes from. I just want the deal. So in a way, a wholesaler that doesn't have a very good buyers list, they're a pretty motivated seller. Like they've got to sign that contract in a hurry, right? So in some cases, it makes sense to be the buyer on those wholesale deals.
Yeah, I was going to ask that question. Let's say we go back to the example. If I'm buying a property from Jared for $100,000, and it's a good deal. You know, maybe it's worth 120, like you said, but I don't have a buyer's list, and so I'm sitting on this deal. You know, I told Jared I'd pay him $100,000, and I'm sitting on this deal, and I don't have anybody to sell it to. What happens if you get stuck? I mean, obviously you could probably back out, but that's, I don't know if you have like due diligence money or whatever else. I mean, what's the potential risk there if you can't sell it?
So most wholesalers are going to have a due diligence period. We always do. If it's a deal we know we're going to do, we'll put up hard earnest money so that the seller knows we're going to perform, or we're going to lose our 1,000 or 5,000 or whatever earnest money we put up. But yeah, there's a due diligence period typically. So, but yeah, I mean, there's definitely a risk with it. That one of the things that we're really good at is we're really good at wholesaling. So we scrape all of the data, so we know who the cash buyers are in our market. So we continually scrape that. So if maybe not as of an experienced wholesaler tries to wholesale, let's say the same deal, he's got a contract for 100, he might have 10, 20, 30 good contacts to wholesale that deal. He might sell that deal for 125 and be able to make 25. But if we have that same deal, we're probably going to be able to move that contract for 140 or 150 because we have the buyers that we're continually cultivating.
Interesting. Very interesting. I had another question I was going to ask. You go ahead, Ethan.
Yeah, I was going to say, I kind of have some questions around flipping. So let's say you get into a house, you get a good deal on a property, and if you were to invest some money into fixing it up, then obviously it's going to have a better potential sell-off when it gets to that point. So I'm guessing you have like a group of contractors or general contractor that you work with for the majority of those local flips. Is that how you do it, or?
Yeah, we do. So earlier I mentioned our construction manager. Her title is actually our asset manager, and she has 5 general contractors that she project manages. So at any given time, those general contractors are anywhere within an hour of our office working on our flip properties. So in our pipeline right now, we've got about 40 projects, they're at any phase. They might be under contract to a retail buyer, or we might have just purchased it and we're waiting for a tenant to move out, or they might be under construction, right? So it's any phase. We've got about 40 in inventory. So of the ones that are under construction, we've got those 5 general contractors that are working on those properties and trying to help us move them forward.
I remembered my question. So, one of the things you talk about is that you're doing a lot of flips or wholesales, but really like we mentioned before, the market is so hot right now. I would almost one could argue that a strategy is just buy up as much real estate as you possibly can, and then just hold it until because the market could be giving you a buy and hold, could be giving you a better margin than if you were to just your profit margin on a 2-month flip would be. So how do you balance that between, like, if you find a good property and you're like, oh, this is in a great neighborhood, a great city, we can flip it and sell it right now, or we could flip it, and if we sell it 6 months from now, it'll be worth $30,000 more. I mean, how do you balance that?
Well, it's kind of a measure of how willing you are to speculate.
Yeah, exactly, I guess.
I'm not much of a speculator. If I don't have funds behind me, I'm not the guy that's going to borrow private money or hard money and just hold property and hope the market keeps going. I survived 07, 08, and can tell you what, there's a lot of stress that comes along with a market that turns when you're not ready for it. However, for the properties that the numbers do make sense, I'm definitely a buyer. And I try and buy 2 or 3 properties a month to hold on to. I'm very, very bullish with the market in my backyard, and by all indications, things are going to keep going. And if they don't, I'm okay too, because I've got rentals, I've got cash flow, and I'm comfortable. I'm not a speculation guy where I'm buying to move it in a year and make that exchange.
Yeah.
I'm a 10-year plus guy,
Yeah.
for sure.
So obviously, well, I kind of have two questions that are separate but similar. So one question was, you just said that you're a kind of potentially a buy and hold 10 plus years if you can with the rental properties and stuff like that. Obviously, if you're doing, and I'm sure there's tax advantages to holding properties for longer periods of time. Whenever you're doing fix and flips, I know maybe on a personal nature you have, if you flip it within the first year, you have some sort of short-term capital gain tax that you're dealing with that could potentially be higher than if you were to hold it for longer than that. Do you run into that in the business, or is it just kind of part of the numbers that you put into a deal? That we're going to pay X amount of taxes on this whenever we sell it in the short term.
My strategy is I just don't pay taxes.
That's a great strategy.
I'm just kidding.
Tell me, let's see. What's another episode about that? I just want to hear about that.
Yeah, I actually got audited 3 years ago, and it was horrible. It was brain damage, man. And I felt like I was doing everything right. I felt like my CPA, my bookkeeper, I felt like I had things in order. And man, being audited, that's a reality check. Like that makes you reevaluate your business model and your accounting methods, and so forth. So for me, it's actually not a capital gain because I'm a real estate professional. So it's actually earned income, is how I pay taxes. So as far as, I think what you're asking here is tax strategy. So what I'm doing to insulate myself from having to pay exorbitant taxes is I'm buying properties so my buy and hold company is buying properties from my fix and flip company. Rather than realizing that gain, I just take that as equity. So anything that I buy and hold, it's, most of it's going to come from my fix and flip company. The other thing that I'm doing is I do cost segregations. I'm not sure if you guys are familiar with those, but that's basically where you can escalate depreciation. So typically when you own real estate, residential is different than commercial, but it's depreciated over a period of 27 and a half years, which actually doesn't make any sense because the life of much of the material that you have in real estate doesn't last 27 and a half years. For an example, a water heater or carpet or there's things they've got a life of 3, 5, 8, 10, 12 years. So a cost segregation, it's a study that's done. There's actually companies that will come in and do a study on the property for you, and they'll say, okay, all of these materials related to the property, you can depreciate these over a 5-year period, and these you can depreciate over an 8-year period. And so it escalates your depreciation. And then with the tax law changes under Trump, any real estate purchase after September of 2017, you can actually get 100% depreciation on. So those are my two strategies: is cost segregation and buying and holding from the fix and flip company and not realizing the gain.
Yeah, very interesting. So like what you said is that when you're buying from your buy and hold, you're buying from your fix and flip. That way the purchase from your fix and flip, that is simply coming in as equity, which you don't have to pay taxes on that.
Right.
And it's not coming in as profit. And then that's very, very smart. Very good.
So and then with that buy and hold property, then I can do a cost segregation on it, and then I can escalate the depreciation, and that helps offset some of the gain that the fix and flip company provides.
Yeah.
That's awesome. That's kind of what, and I guess as far as cost segregation goes, you probably don't have to be. I know you said you are a real estate professional. Does that mean do you have to be a real estate agent to be a real estate professional? What kind of makes you a real estate professional?
Yeah, so that it's just designated by the hours of week that you work
Okay.
In the industry. So if someone is a full-time, general doctor, it's going to be hard for them to claim that they're a real estate professional working 40 plus hours a week.
Yeah, for sure. The second part of my question. The second part of my question that I had, we were talking about long-term or buy and hold type rentals. Do you have a property management company or do you manage your own rentals? How does that?
You said you had 108 rentals or something like that.
Doors.
How do you do all that? Manage it.
So that's managed internally. So I have a bookkeeper that splits time between the buy and hold company and the fix and flip company. She helps do some of the property management. And then I also have a property manager that works directly for me that, of course, follows my processes and manages the way that I want my properties managed. So it's not only is it less expensive, but more importantly, it protects my assets much, much better. A tenant can do a lot of damage to a property if left unchecked, and with the amount of property that I have, it's important to me to kind of keep my finger on the pulse.
Yeah, it makes sense to keep that in house, and you probably save a little bit too by keeping it in house.
Yeah, most management companies are going to charge you 8 to 10% of your gross rents. My cost for my management, it's right around 4% of gross rents. So it's pretty significant, but it's also hands-on. It requires some of my time, and we have a weekly meeting, and there's some other things related to that.
So Matt, your position, you're kind of this is your company, right? I think you and a partner, or at least maybe one other partner, you're at the helm of all this. Or what exactly do you do to keep all this running? Are you just kind of managing different things and stuff that boils up you deal with, or what is your role in all these moving parts?
Yeah, so I don't have a partner in the fix and flip business, and most of my rentals I own on my own. I do have a couple of partners that I own some rentals with. So my part is we have our organizational chart. So in the fix and flip company, there's I've got 16 employees. So I've got a COO that runs a lot of things for me. And then I've got my department heads that, are responsible for what they do. And then we follow a system. It's the EOS system. It's like it's the entrepreneur operating system is what it stands for. There's a book called Traction written by Gino Wickman, and it's kind of his process that he outlays. And that process consists of weekly meetings where certain things are done and where certain KPIs or key performance indicators are reported by each team member. And so it's all kind of structured that way. So things get reported to me, and we've got really good processes too, so I really don't have a whole lot of stress right now. Despite the volume of deals that we're doing on a monthly basis, because we've got really good organizational structure, and more importantly, really, really great people on my team.
That's awesome. You gotta have good people, or else the whole thing just falls apart. So that's awesome, and it's just incredible how you can manage all that and be on top of it. But really, if you have good people in place, it becomes much easier to manage all those moving pieces.
100%. And good people gets talked about a lot, but as much as it gets talked about, I don't think it gets talked about nearly enough, because having the right people on your team is so critical. And the good team members are just they are, sounds cliche, but man, they are invaluable. In fact, I'll share this with you guys. So last March was the COVID scare. And of course, as any other business at the time, I was panicked, wondering what the repercussions were going to be and how that was going to impact the real estate market. We had a lot of property in our inventory. Like I mentioned earlier, I survived the 08 crisis. So for me, it was kind of this, okay, how are we going to get through this? So for about a 2-week period, we figured out how to reduce every possible expense that we could and how we could quickly liquidate all of the properties that we owned that were in our current inventory. So during that time, I was having talks with my management team. I had 3 different people on my team came to me during that time, and they said, "Hey, Matt, I don't need to take a salary." Like they either said, "Don't pay me," or "Just pay me when you're ready to pay me, when the company's ready to pay me again. We're going to make it through this."
Yeah.
And for me, that was like this lifeboat moment. I was like, hey, I know I've got the right people that I'm in the trenches with when they come to me and they're that committed and they're that dedicated and that selfless. I mean,
very cool.
So to circle back to people, it's invaluable to have the right people on your team.
Yeah, people that are invested in the cause and really what you're doing.
Yes.
Yep.
And they have the belief in you and in the company that you're running, because they know that, I mean, they all knew we were going to make it. We didn't know how at that point, but we know that we're good. We know that we're good at figuring things out. We know that we're resourceful and we're efficient, and it was a matter of time. We just didn't know how rough it was going to get, but we were going to figure it out, and they knew that too.
Yeah, man, there's been a lot of information in this episode. It might seem like we've bounced around a lot, but with a lot of the different questions, but I think it all kind of boils down into just one great strategy of educate yourself and do what works best for you in your specific situation. But thank you, Matt, for taking your time to answer these questions with us. And as always, and as our first repeat guest here on the podcast, I know we already asked you this question one time, but we always ask our guests about their personal creed. A creed is a set of beliefs or aims that guides someone's actions and how they live their life. Would you be able to share an additional portion of your creed with us?
Definitely. Yep. Do everything you can to help your friends succeed. So there's a book written by Bob Bodine. It's called The Power of Who. And in that book, he kind of goes against the grain of what we're seeing today, where, I've got I don't even know, a couple thousand Facebook friends, or, you guys do too. I'm not online much, but I know there's LinkedIn connections, and we're all about networking, and, the power is in your network, and you're only as good as your network. And he kind of goes against that. He says the power, in order for you to create the life that you want and to fulfill your dreams, you already have the contacts to do that. And those contacts come through your very best friends and the people that are the closest to you. So 1, make friends, and 2, do everything you can to help your friends be successful.
That's great advice. I like that. I think that having 500 superficial LinkedIn contacts doesn't really do you any good, but having 4 or 5 solid relationships with people that you can call and say, hey, how's it going? That can be so beneficial, and just having friends that you can talk to and bounce ideas off of. That's just so important. I totally think that's a great thing.
Yeah. It reminds me of a quote. It says something along the lines of, strong people don't break other people down, they lift them up. And you know, I think sometimes we're the ones that can do the lifting, and then I think other times maybe we're the ones that need to be lifted in all aspects. But I love that what you said.
Well, and we kind of have this pride thing too, where we don't want to ask for help. And maybe we're even reluctant to ask those that are the best suited and the closest to us to ask for help. But, you know, for me, the way that I look at it with the people that I'm closest to, don't rob me the joy of being able to help you when you need it.
Yeah.
Because so much joy comes from helping, especially helping the people that we love.
Yeah. Well, Matt, speaking of that, you know, we really appreciate you coming on today, and you shared such great advice. And for us, it's been beneficial to me and Ethan, and hopefully to our listeners as well. I think that you just have so much wisdom to share and so much good experience that it's going to bless whoever hears this. So, again, thank you so much. We want to be respectful of your time, but, you know, thanks. And for all those who are listening, we appreciate you listening today, and you can follow us on Instagram, and let's build that creed together.
All right, let's do it.
Thanks, Matt.
Okay, sounds good, guys. Thanks a ton.